There's only 50 multiple choice. No, there's 11.
Oh my goodness.
There's 11, sorry. On this, then we go to another page. Okay, number 8. Basically, oh, interesting. I like this one. You can answer this for me right now. An auditor is unable to form an opinion on a new client's open inventory balance. In other words, this is a new client and we were not there at the beginning of the year. So there's no way in which we could form an opinion on the opening or beginning inventory. Now, it says, when could we issue an what could we issue an unmodified opinion on for the current year? So when could we issue an unmodified opinion even though we were unable to audit the opening inventory because this was not our client at the time? Now let's think about that. For some of the financial statements, we basically could not issue an opinion because we weren't there at the beginning of the year. But we could issue an unmodified opinion on, now the way this is worded, well, let me ask you, I don't want to give it away with that, I want to get your guide. Could we issue an unmodified opinion on the income statement? No. I would say no, because isn't beginning inventory part of cost of goods sold? Could we issue an unmodified opinion on the statement of retained earnings or the statement of stockholders' equity? Probably not, because we wouldn't know about beginning retained earnings. Could we issue an unmodified opinion on the statement of cash flows? No, because we wouldn't be sure of the beginning balance of cash. But could we issue an unmodified opinion on the balance sheet, especially the ending balance sheet? Yes. Now the model answer here says balance sheet, but they really should have said ending balance sheet. Everyone sees that now. The next year we could do it for everything. But if you're not there at the beginning of the year, if you were not the auditor for the beginning balances, you really, unless you contacted the other auditors who were on the year before and you accepted their work, and I'm sure if you picked up a client from PricewaterhouseCoopers, you might be willing to accept the results of their audit. But strictly speaking, or let's say this is a client that just became publicly traded, so didn't have an audit before, you can only issue an unmodified opinion that first year on the ending balance sheet, because you don't know about the beginning cash, the beginning retained earnings or stockholders' equity. You don't know about the beginning inventory. That's why you can't do it on the beginning balance sheet, and you couldn't do it on the income statement. Everyone see what I'm getting at here? Okay. Second possibility, multiple choice A. This relates to next week's work again. If an auditor's risk assessment, that's chapter on materiality and risk I was looking at this morning, trying to come up with topics for the online discussion for next week. If an auditor's risk assessment is based on the effective operation of controls, I assume they mean internal controls, the auditor will likely, Bill, repeat that, I will. If an auditor's risk assessment is based on the effective operation of controls, I assume they mean internal controls, comma, the auditor will likely well, you'll read in that chapter and we'll put this is an online discussion topic I'm going to add this week, about assessing risk, different stages of the audit. But a lot of that is going to be influenced by specific internal controls. If there are strong internal controls, they will assist you in detecting or preventing. If there are strong internal controls, that will assist you in detecting or preventing material misstatements. And would that not impact your risk assessment? Because I would assume there would be less risk involved with the stronger internal controls. I think that will help you. Again, you'll have to read that whole chapter, although now with this guidance, maybe that chapter will make more sense. It's not light reading, though, trust me. The third possibility for number 8. Again, this is from the chapter for next week, that materiality and risk chapter. Inherent risk is evaluated. Inherent risk. Now, there's several types of risk that are in that chapter. Control risk, detection risk. They're talking here about inherent risk. That is evaluated, inherent risk is evaluated to help an auditor assess. To help an auditor assess. Now, maybe I should define inherent risk here. Again, when you go to that chapter for next week, now that you have some of this guidance, you know, keep these things in mind when you go through that chapter. I have my syllabus right out here, but I was looking at it today. There, let me see. That's chapter 9.
So for the final exam, we should focus on chapters 1, 2, 3, 4, 5, and 11, 6, 7, and 8?
No, I forget the final. I think it's pretty comprehensive.
I'm sorry, the midterm. I'm sorry.
The midterm, yes, that's a good, no, Letitia has a good point here. The midterm goes through week 4, goes through the week 4 content. So that means that you might start preparing for it now. If you have any last minute questions, you would ask me next Saturday, but we'll leave it open till midnight on Sunday instead of 10 o'clock. But that means by Sunday night at midnight, you'd have to have completed the exam. So maybe start preparing for it. If you have any last minute questions, you could ask me next week. That's another but I don't want to carry the exam over into the next week because there's a bunch more material. So everything through the end of week 4. Yes, through the end of week 4.
There's 12 chapters.
Oh, I don't doubt it. And then the finals got all of them, so that's like 20-some. But we're going to have a whole session on the review.
You're going to curve this one?
I'm sorry?
You're going to curve this test?
I curve all the exams.
That's good for me.
I curve all the exams. Inherent risk is the susceptibility. Inherent risk is the susceptibility of there being material misstatements. Of there being material misstatements. In other words, other financials. If there are not adequate internal controls. Inherent risk is the susceptibility of there being material misstatements of the financials, assuming we have weaker internal controls. But again, that's just my idea off the top of my head from today. Take a look when you're going through that chapter and look for some appropriate language. Multiple choice 9, remember we're only going through 11, then we go to the other page.
Wait, so what was the third question there?
Inherent risk.
Is evaluated to help an auditor assess blank?
To detect, in other words, material misstatements,
Okay.
assuming there are inadequate internal controls.
Thanks, Amanda.
Oh, this is hard doing this today. I knew I was dreading this, but I'm hoping this helps. I can see why Joan Moore completely eliminated both these exams and put her own stuff in there. That is illegal. You're not allowed to do that. According to the dean, you can only change 15%. But I can understand why she did it. Okay. All right. Multiple choice 9. Looks like possibility 1, again 5 points. Possibility 1 talks about analytical procedures. Analytical procedures. Which statement is not correct? Which statement is not correct? Okay, so that means we need to know what is correct. Okay. When do you use analytical procedures? Are they required?
Yes.
Yes. So analytical procedures are required on all audits. Our textbook and the chapter coverage for today that we will get to, honest, deals with substantive test versus compliance test. This will also come up next week in the internal control chapter. Analytical procedures are part of substantive testing. That means testing, for example, account balances. So that is part of substantive testing. Analytical procedures like horizontal, vertical analysis, that's part of analytical procedures as well as ratios. Analytical procedures in themselves, analytical procedures in and of themselves may be sufficient for accounts with small balances. For accounts with small balances. For example, if your company has very little property, plant, and equipment, you're primarily a service business, you might be able to do a horizontal, vertical analysis, and that would be sufficient to satisfy yourself as to the appropriate statement of certain account balances in property, plant, and equipment. So those are some of the purposes for analytical procedures, which means that the one where it would, which means the other answer would be the one that would be the response you would want. Because this said, when would analytical procedures really be not, which statement about analytical procedures is not correct? We just talked about 3 scenarios in which analytical procedures are used. So the other would be the correct response. The second possibility, multiple choice 9, says a benefit obtained from comparing client data, a benefit obtained from comparing client data with industry averages is that a benefit obtained from comparing the client's data with industry averages is that it provides well, this one is trickier. They refer to chapter 7. But this might be an indication of the likelihood of financial problems. This might be an indication of the likelihood of financial problems. And the third possibility, the primary purpose of performing analytical procedures, the primary purpose of planning analytical procedures in the planning phase of an audit is. The primary purpose of performing analytical procedures in the planning phase of an audit is and again, I'm giving away a little bit too much because there's a couple answers here that I could argue on behalf of. But what they want you to do, it helps you better understand the client's industry and business. Helps you better understand the client's industry and business. Multiple choice 10. Which statement is not correct regarding analytical procedures? Now I'm going to give you I'm giving away an awful lot of answers here. I feel so bad. But, you know, I mean, I want you to do well in the exam, but the big point is for you to learn the content that will help you in real life and in the CPA exam. So I not feel the guilt. I don't agree with this answer, but this is what you have to put down. Which statement is not correct regarding analytical procedures? The answer they want is that analytical procedures must be performed throughout the audit. Must be performed throughout the audit. Now let me comment on that. Remember, this is consistent with what their earlier question, where they said it only must be performed during the planning and completion stages of the audit. So this is consistent. I personally believe in using analytical procedures in the testing stage of the audit as well. But at least this is consistent with the prior one, where it said during planning and completion, not during the testing stage. But if you're doing an audit, I want you to do it during all the stages, but not for exam purposes. All right, now something that I'm not going to have to comment much on, thank God. Okay, multiple choice 10, possibility 2. The most widely used profitability ratio is. The most widely used profitability ratio is. And that I'm not giving any hints on. Remember, there's 3 classifications of ratios. Was it solvency, liquidity, solvency, profitability? All right. Third possibility, multiple choice 10. Which is correct with respect to the use of analytical procedures? Which is correct? Now, I'll tell you how you can get this one correct. Which is correct? Well, 3 of the answers talk about using analytical procedures either in all phases of the audit or in the testing phase. They don't want those answers because they don't like to use analytical procedures in the testing phase. So those 3 answers are incorrect. It's the other one. But again, Bill personally believes in using analytical procedures in all phases. But at least they're consistent. All right, and multiple choice 11. First possibility, I'm not going to say much about. Which ratio is best used? Which ratio, this is possibility 1, 5 points. Which ratio is best used to assess a company's ability? Which ratio is best used to assess a company's ability to meet its long-term debt, obligations? To meet its long-term debt obligations. So obviously it's going to be one of the solvency ratios. Another possibility for number 11, I like this one. Which is a liquidity activity ratio? Which is a liquidity activity ratio? And the third and final possibility, then we go to the other page of the exam, deals with analytical procedures. Which statement is not correct? Which statement is not correct?
How many problems do they have on analytical procedures?
God, I know, they're obsessed. Well, we know okay. Well, the first answer is correct, so remember they want to know which is not correct. It says analytical procedures are used to help understand the client's business, so we know that that's not the answer because that is correct, because that was the answer to another one. Analytical procedures must be used in the planning and completion phases of the audit. It's optional in testing, so we know that that's correct, because that was in another question.
Right.
Like you said, they love this analytical procedures. And analytical procedures must be used in the completion phase to direct the auditor's attention to possible misstatements. So this is also correct. So it's not the answer to this question. Analytical procedures in the completion phase may draw your attention. In the completion phase may draw your attention to possible misstatements. And secondarily will assess going concern. And secondarily will assess going concern. So those three are correct, so it means it's the other one. Okay, well, I guess they're okay. What the heck? All right, now let's go to page 2 of the exam. And here we have, let's see how many.
Are they essays?
A lot of them, yes.
Oh my God.
7, 8.
Ugh.
8. Well, some are different. Some are matching.
Can we write some of
Bill,
them?
can you hang on a minute? My computer just shut down in the middle of my notes.
Oh no! Can you reboot or something?
I'm trying now.
I'll send you my notes, but where can I?
Or can you log? Oh, you were at that computer or your
Yeah.
own?
No, this computer.
They'll come back.
Let's see. Hopefully. Not the time. Maybe they have the auto save on here.
Yeah, that should be on. Yeah.
Are you back up?
Yeah, it's coming up now.
Okay. And you won't have lost everything, right?
Hopefully not. I don't know. It's just powering up now.
Okay.
I'll check.
Well, if not, she's been recording,
Okay.
so that will help. Some of these problems on page 2 are not bad, and some of them are another pain.
It's
going
still
again?
going. I'm waiting on it to, the wheel is turning, it's thinking. Something told me to save the document, but I was just typing, wasn't thinking, and it's not the
Well,
wrong
you didn't
time.
think that was going to shut off.
I know. Oh, Jesus.
It didn't save?
I don't know, I can't tell right now until the power back up for me.
Once we get everyone back, then we'll get into it again. Oh, I knew this was going to be painful today. Ah.
gotta be kidding me.
No, is it all, did it get deleted?
It's nothing here. Oh, it's powering up. Nothing's here. I'm looking at it. Oh, God.
Well, she's gonna put on,
Yeah, she said this. She
okay,
wanted to-
please.
I'll put it up tonight.
It looks like it deleted everything.
I'll send you my crappy notes
Okay,
too.
okay, thanks. I appreciate
They're just like
it.
half sentences and stuff, but it'll
Okay.
help you.
So it didn't save anything.
No, I'm gonna, now, let me just start from, what we're doing now, the essay question. Let me just save the doc under, midterm, so if it goes. Cause I didn't hit save, I was just typing away.
Oh, shoot, oh, damn it. I remember once, when the computer labs used to be open 24 hours.
Yeah,
I remember, in Naperville Center, it was like 11:30 at night, and I was working there, and a whole bunch of students were in there.
Mhm.
And I forgot that every day at 11:30 at night, the computer shut down
Yeah.
for like 10 minutes. And a student
most
was
of it.
typing a paper, she was on like the 12th page of the paper, and I forgot to warn her that you better save it, lost the whole damn thing.
yeah.
Yeah, it all went down the tubes.
Yeah. I just saved this one, so for the essays, I'll take this one.
Okay.
Chips.
Oh, hurry, because I want to get into
Okay.
it. Oh, it's Chips is right next door, so
Yeah.
it's close. Now, this first question is going to be worth 5, but the others are all worth different amounts. Some are worth 25.
So you said there's 8 on page 2 and that's it?
But there's several possibilities for each one.
Oh, okay.
I should not give her my notes if you're curving it.
It's like
I'm the one who's gonna need the curve,
No,
you
it's
know?
like they used to say, like, it was so difficult to get into medical school that some students would sabotage other students, like experiments, because then it would help their chance.
Well, you're gonna post the lecture again, so.
All right, page 2. Save.
I did,
I
I
sent
did.
you my document.
Okay.
So.
Okay, problem 1, 3 possibilities, only 5 points. It says match the following definitions to the appropriate terms. Okay, let me just give you the, I'm not going to read everything out, but in other words, they give you 3 definitions and 3 terms, and you're supposed to match which with which. For possibility 1, the 3 terms are PCAOB auditing standards, PCAOB auditing standards, then basically GAAS, generally accepted auditing standards, GAAS, and SAS, statements on auditing standards. So for problem 1, possibility 1, PCAOB auditing standards, GAS, GAAS, and SAS. The second possibility, the 3 terms are standards of fieldwork, general standards, standards of reporting, and that's also the same for possibility 3. General standards, standards of fieldwork, standards of reporting. How many points though only?
5.
Only 5. Problem 2, 20 points, 3 possibilities. Possibility 1 gives a factual situation, and they want to know, they want you to prepare the appropriate audit report. You are, okay, appropriate audit report. They don't mean the 500 paragraphs, but
Is it basically kind of copying that a template that's in the book?
yeah, but, geez.
Yeah, we gotta.
why don't you just give the opinion paragraph? How about the opinion paragraph only? Which means you'll have to know what type of opinion it is. Do the opinion paragraph. It's a short factual situation, basically here, where there was the audit manager lacked independence, but you didn't know about it until the audit was over. Second possibility gives a huge qualified audit report. And they're asking you to do the opinion paragraph. So they want you to do the opinion paragraph. Now this is a qualified opinion, so in your opinion paragraph, you should have the except for language. The except for language. And the third possibility also wants you to do the opinion paragraph. Looks like another, well, it has another except for, but there was also a scope restriction. So it's a qualified scope and opinion report. But it's a, remember, a scope limitation, it's still a qualified opinion though. Because remember, scope limitations, if they're extreme, were a disclaimer. This is not a disclaimer. If this, remember, you can also have it qualified. So they want the opinion paragraph. So maybe have a standardized opinion paragraph ready and then you can alter it to meet the needs. Okay, that's why it's 20 points. That's a little bit more involved. Problem 3, 10 points. Now, I like the, here's factual situations. And they want you to indicate if there's a specific rule violation under the AICPA rules. And they want a 1 or 2 line explanation. So you'll also have to know the rule numbers. So like Rule 101, independence. Violation because, or no violation because. So violation or no violation, why not, and what is the applicable rule number? I like that one, it's kind of like the homework. Problem 4, same thing. Same thing. What rule applies? Is it a violation? Is it not a violation? Why or why not? Or does it depend on other information?
10 points as well.
10 points as well. Thank you.
Hold on, so everybody's gonna get that?
I'm sorry?
There's no like 3 options. Did you say the other options? I'm sorry.
Yes, there's different possibilities, but they're
Oh,
all,
okay, but
yeah,
it's all
so
the same. Okay.
like one of them has Rule 101, another one has Rule 501, one has Rule 505. But they're all the same type of scenario. Okay, problem 5, 25 points. Now, there's a big factual situation here. What issues do you see? What would you advise the CPA to do? What issues do you see under Sarbanes-Oxley? How would you advise the CPA? Is there any time when the CPA could perform any of these services? Bill, can you be more specific? Yes. Basically now we have a new client, publicly held, and fundamentally I think what this is saying here is that what work could you do on behalf of this client if you're going to do their audit? So take a look at what the client wants you to do and indicate if this would be an issue that you could do or one you could not do based on Sarbanes-Oxley when they talk about the incompatible occupations, etc. There's a number of issues. For example, one says, the audit manager has been approached by the client to come work for the company as CFO. And then there's some other issues.
That was one of our homework assignments.
Yeah, so it's a factual scenario. That's possibility 125 points. The model answer lists 7 different items that you cannot, they have a 7-part answer. Okay. I don't know if you need all 7, but they do.
Well, then, so do you want us to do, how many do we?
How many you can find. But
So if we only do one,
I won't require all 7, but as many issues as you can find. So if you only list 1 or 2, that's probably not enough. Okay, second possibility, I'm talking about Sarbanes-Oxley. Okay, they want to know what are some of the mandated features of an audit committee of a public company. This is 25-point possibility 2, problem 5. What are some of the mandated features of the audit committee of a public company under Sarbanes-Oxley? Their model answer lists 8. 8. Do you need all 8? No, but if you only have a few, it's not enough. So what are the Sarbanes-Oxley requirements for an audit committee? About the composition, what they do, what they are required to do. That's possibility 2, 25 points. Again, have answers ready for all these before you even enter the exam. Possibility 3, 25 points. This is the other possibility for this one. Briefly discuss the brainstorming session required by SAS 99. Be sure to include a list of ideas that should be addressed in the session. Now they have 4 items down in their model answer. What should, anything you want to tell me about what must be included in a brainstorming session? We had some research on that this week in the online discussion.
So briefly discuss the brainstorming.
Say yes, the brainstorming session, include any ideas that should be addressed in the session. And some of that might be in the online discussion that was posted this week. Might be able to cut and paste some ideas out of there. That was problem 5. Problem 6, 25 points. Possibility 1, discuss the sanctions the SEC can impose on auditors. The sanctions the SEC can impose on auditors. This is chapter 5, if I recall. SEC can impose on auditors. Suspending them and having somebody else review their work and making them do continuing education or whatever. So take a look at that in chapter 5. Possibility 2 for problem 6, 25 points. They say you have to have at least 5 steps. They have 8. You have at least 5. Discuss some of the steps the AICPA and the accounting profession as a whole. Steps the AICPA and the accounting profession as a whole can and are taking. They can and are taking to reduce practitioners' exposure to lawsuits. In other words, how can you reduce practitioners' exposure to lawsuits? They refer to chapter 5. Let's see something a second here. I think the page number is the wrong page numbers from an earlier edition. Let me just look a second here. Actually, I might have to do some research on that. Oh, no, it's in the book. Ah, page 130. Page 130, chapter 5. All right, my apologies. I was being critical there, and I shouldn't have been.
So this is problem 6.
Problem 6, possibility 2. Now, problem 6, possibility 3, we're at 25 points. There's 4 major sources of an auditor's legal liability. One source is liability to the audit client. Briefly summarize the other 3 sources. Oh, what a lousy question.
Can you say it one more time? I'm sorry.
Yes, they say one of the 4 major sources of an auditor's legal liability. One is they could be sued by the client. Can you expand this a little bit for 25 points? Indicate the 4 grounds upon which, remember, we talked about simple negligence, gross negligence, fraud, under tort theory. I want you to do a little more than they're asking for. And then under contract theory, breach of contract. What is Bill? What are the other 3? The second one is liability to third parties. Liability to third parties. And could you expand that, please? That would be under tort theory, gross negligence or fraud, and under contract theory, that would be only if the third party was a third party beneficiary of the contract. Please add that for Bill. Keep Bill happy. He's grading it. The third one is liability to shareholders. Liability to shareholders, and that would probably be under securities laws. Securities laws, and I would assume that would be the 1934 Securities Exchange Act, probably Rule 10b-5 or Section 10b. And the fourth one, criminal liability. Criminal liability. Everyone set on that? See what I want? I'm actually asking a little more than what they're requesting. Okay, everyone set? Problem 7, 25 points, similar to the homework. They give you A through K, and they give you 1 through 9, and you're supposed to match. I'll tell you what, I'll give you the A through K. This is similar to a homework problem. Okay, here we go. Everyone set? A through K, get ready. Letter A, foot. Foot.
Foot.
Meaning add. It's another word for adding. But like I say, foot this column.
Oh, I never heard
You
that.
thought I mentioned, oh, okay.
Wait, is this 7?
Yeah.
This is 7,
Okay.
possibility 1.
Okay.
Letter A is foot, letter B is compute, letter B is compute. Letter C is scan, letter C is scan. Letter D is inquire, letter D is inquire. Letter E is count, letter E is count. Letter F is trace. Letter F is trace. Letter G is recompute. Letter G, recompute. Letter H, read. Read for letter H. Letter I, examine. Letter I, examine. Letter J, observe. J, observe. K, compare. K, compare. Possibility 2, there's 10 of these, 10, 25 points. They basically want, this is similar to another homework problem. They want you to indicate if this is an external or an internal document. External or internal. And the third, and I'm sorry.
So this is like a short answer question?
Short answer, yeah, I like it. Isn't that nice? And number 7, third possibility, match 5 of the terms with the definitions below. And they give you A through H, but obviously not every letter is going to be used. because A through H is more than 5. So letter A, audit documentation. Audit documentation, letter A. Letter B, audit procedures. Audit procedures. Letter C, audit objectives. Audit objectives. Letter D, analytical procedures. Analytical procedures. Letter E, budgets. Letter E, budgets. Letter F, reliability of evidence. Reliability of evidence. Letter G, sufficiency of evidence. Sufficiency of evidence. And letter H, persuasiveness of evidence. Persuasiveness of evidence. 25 points, short answer. And number 8, 25 points, not short answer. Possibility 1, discuss the essential activities involved. We're almost done. Discuss the essential activities involved in the initial planning of an audit. The initial planning of an audit. Now they have 4 items from chapter 8 that are down here, and I have my own list. Let me just check something. I want to check a page number on this. Page 211. 211. There's 4. 211. That is the right page. Possibility 2. 25 points, problem 8. Discuss the 4 primary purposes. Well, we'll dedicate this one to Amanda. Discuss the 4 primary purposes of analytical procedures. Discuss the 4 primary purposes of analytical procedures performed during the planning phase. Analytical procedures performed during the planning phase of an audit.
Page 225.
That's right. That's right. Matter of fact, you're right. That's it. Yes, you got it. Let me see, though. They have 4 in the model answer. Let's see. Well, there they are. They're in the chart. Figure 8-6. Figure 8-6.
For the same, okay, figure.
Yeah, figure 8-6. Okay, because I was going to say here, I looked at the wording. It's they're under the phase. It says required planning phase. Understand the client's business and industry, assess going concern, indicate possible misstatements, and reduce detailed test. So figure 8-6, the 4 purposes for the page 225 is correct.
So then, it doesn't have to be essay format, you can just list
Then
them?
it could just be,
okay.
in fact, their model answer has dots,
Oh,
you know,
okay.
bullet points. And the third possibility, auditors routinely conduct analytical procedures. Yes, oh geez. Okay, during the different stages of the audit, what do they want us to do? Identify the primary and secondary purposes of performing analytical procedures in each phase of the audit. So that's the same page, but it's more work. Again, it's figure 8-6, but here you have to address all 3 phases: the planning, the testing, and the completion.
So we can just use what's in the book, right?
That's right. Perfect.
That's not fair. You should take that one out.
No, I should make it closed book and notes. No, I think there's enough suffering already, so that's okay. Okay, well, there it is. There it is. Okay, now let's get into, I'm going to try and short circuit my discussion of the chapters because I want to get into the homework. There was some interesting homework here.
Okay, so are we doing homework first or
and the
notes?
videos in there?
I'm sorry?
We're doing homework or notes first?
Oh, I think I'm going to just skim through the chapters and point out a few pages and go to homework.
Exactly. I put the time mark on there. So there's 2 videos so far, and so you know, obviously the time mark.
All right, chapter 6. We won't get all the chapters. Well, we'll catch up next week. And for the final, there won't be an issue because we're having that separate class session. So I'm going to do a very broad overview because I want to get into some of this homework. Because some of the homework I thought was kind of interesting, especially like in chapter 7. Just a few things for you to look at on your own here. They talk about the auditor's responsibilities in chapter 6. But what I found most interesting was, and again, we had some good posting that was involved here. Poonam actually found something on this, the cycles of the audit and things. And yeah, I was surprised you found that outside the text. Just a few observations. First of all, and they go through a Hillsburg hardware, the different cycles of the audit. What we're doing in chapter 6 is we're building a foundation as to how we're going to examine specific areas of primarily the balance sheet, but also the income statement. Sales and collection cycle, and there's an excellent exhibit on page 151 showing it with regard to Hillsburg hardware. Acquisition and payment, payroll and personnel, inventory and warehousing, and capital acquisition and repayment. Remember, I gave you examples today of prior students' course projects, because we're not doing the smacky dog food that's in the book. How they took one of these particular cycles and applied it to an actual company that they had some familiarity with, or a business. This exhibit shows the journals that are involved, the different accounts of the balance sheet, and the accounts of the income statement for each of these cycles. So it's a way of how we're going to pursue the audit by cycle. I thought that was very excellent, so pay close attention to that particular page. Now, they have some management assertions. I used to ask about this on page 154, 155, and so forth, but I really don't emphasize that much. I used to give a homework problem. I can't remember if I did or not. But what I do want you to look at to set up this foundation are the transaction-related audit objectives starting on page 156 and the balance-related audit objectives starting on page 158.
Or I'm sorry, I'm lost. What are we talking about? 'Cause I know you said these 2 copies that you gave.
Oh, no.
Okay.
I'm just talking about the chapter now.
Oh, okay.
These were examples from prior students who took a cycle, but you can look at those at your own. I'm trying to mention you need to look at the different cycles of the audit that are described in chapter 6 and look at the transaction-related audit objectives and the balance-related audit objectives.
Okay.
Some of the ways in which we're going to be organizing, for example, our audit programs that we'll be creating for different stages of the audit is by considering these objectives. For example, looking at page 156, we have occurrence and we have completeness. Now, I want to talk about these. On page 158, we have existence and completeness. I want you to think about those. Think about how you would establish that objective. For example, for occurrence or existence, we want to make sure things are valid, they actually exist. So you would trace from the journals back to the supporting documentation. Go from the journals to the documentation and make sure everything that was recorded is a legitimate transaction, is a legitimate account. But when you're doing completeness, you go the other way, because you start with the documentation and then go to the journal. So no, I want you to think about that. Existence, occurrence. Everything that's been recorded actually exists. So you go from the records back to the documentation. For completeness, everything that occurred wasn't recorded. So you go from the documentation the other way to the books of original entry. So kind of think about that. Accuracy they have down here, and notice that's in both balance and transaction related. They have posting and summarization in the transaction related. That's not in the balance related. But the balance related does have detailed tie-in, which is similar. So posting and summarization versus detailed tie-in. That's like does the account receivable control account in the general ledger. Is that supported by the subsidiary ledger for accounts receivable? Are they in agreement? Now your software normally should detect that. Classification versus classification. Both of them are items properly classified. We had a problem last week which indicated a lease was, I think, reported as a capital lease, but it should have been an operating lease. Or maybe it was vice versa. We have timing in the transaction related, and we have cutoff in the balance related. One of the things we're going to see in the sales and collection cycle especially are the timing tests. Also in acquisition and payments. We're going to be looking at a variety of frauds in the subsequent weeks. Some of these you might be familiar with, like stuffing the channel or keeping the cash books open. We're going to do a sales cutoff test. We're going to do a purchase cutoff test. We're going to do cash cutoff tests because of people reporting transactions in the wrong period of time. We also have in the transaction related, okay, I guess that's it they have there. In the balance related, we also have realizable value. That, of course, is like a net realizable value. Is inventory recorded at the lower cost of market, for example? Or are marketable securities recorded at the correct balance? Also in the balance-related objectives, we have rights and obligations. This is an interesting one. When we talk about the inventory observation, which I think is week 7, you see inventory at your client's place of business, which happens to be a retail outlets. But wait, is that your client's inventory? Or is that inventory there on consignment from somebody else, where if they sell it, they'll split the proceeds? Or does your client have inventory at other locations, somebody else's business, on consignment? Or what are the obligations? Are they adequately disclosed? For example, you've seen this before, if there's a borrowing with a long-term note, there may be restrictions on paying dividends. There could be ratio requirements, like the current ratio must be at least 2-to-1 or greater, or the note becomes immediately due and payable. All that information has to be disclosed. So things of that nature. So out of this chapter, I want you to look at the cycles of the audit, and I want you to look and understand the transaction-related and balance-related objectives, because we're trying to form a way of thinking as we set up audit work programs. Now there's other stuff in here. They also talk about planning and audit, and that's on page 162, 163. I have my own list for that, which I'm not sure I'll get to today. Now, in the homework for this chapter, I just had 3 problems.